Most people think getting more insurance coverage means paying more, but what if the opposite were actually true? We stumbled onto a move that increased coverage and slashed premiums, and honestly, it felt a little too good to be legal. The catalyst here is something the insurance industry quietly counts on: your inertia. They know most people set their policy up once, forget about it, and just auto-renew every single year like it's a gym membership. They're too lazy to cancel. Think of your insurance premium like a hotel room rate. If you never check competing prices, the hotel will happily keep charging you whatever they want. The market shifts constantly, your risk profile changes, but your policy just sits there collecting dust while your wallet quietly bleeds. There was a moment, maybe 2 or 3 years ago, where everyone felt locked in rates were spiking. And the narrative was that insurance only goes one direction, up. But that story wasn't the whole truth. It was just the comfortable excuse nobody bothered to challenge. Here's the psychological trap we all fall into. We conflate familiar with safe. So switching providers feels riskier than it actually is. Meanwhile, the data consistently shows that loyal customers are often the most overcharged customers, which is almost poetically unfair. The exact move? We bundled policies, raised the deductible to a level that actually made actuarial sense for our net worth, and shopped 3 competing carriers simultaneously, forcing them to compete. What sounds like financial wizardry is really just basic negotiation dressed up in paperwork. Historically, insurance markets run in hard and soft cycles. And right now, many regions are entering a soft cycle where carriers are hungry for new business. Every cycle feels unique when you're living inside it, but the pattern of competition driving premiums down has played out dozens of times since the 1970s. The biggest misconception is that higher deductibles always mean more risk. But if you have even a modest emergency fund, you've essentially self-insured the gap and pocketed the premium difference. The fear of the deductible is doing more damage to your wallet than the deductible itself ever would. A practical lesson from every down cycle in insurance history is that the people who reviewed their policies proactively captured savings for years, while passive holders kept overpaying until the next crisis forced their hand. Moderate, disciplined action, not panic, not paralysis, is always the move that ages well. The irony is that the industry spends billions advertising how much they care about protecting you, while simultaneously banking on you being too busy to notice you're overpaying. There's something beautifully absurd about a system where loyalty is punished and skepticism is rewarded. Process beats conviction here every single time. You don't need to be certain about which carrier is the best. You just need a repeatable habit of reviewing annually and letting competition do the work. Sizing your deductible to your actual financial position, not your emotional comfort level, is where the real leverage lives. We're not saying blow up your coverage or gamble with your protection. We're saying bring the same disciplined, unemotional energy you'd bring to any smart financial decision. Patience and consistency in reviewing your coverage will quietly compound into thousands of dollars over a decade. At the end of the day, the goal isn't to win some war against insurance companies. It's to make sure your money is working as efficiently as your coverage is protecting. You can feel genuinely comfortable with any outcome when you know you've done the rational, prepared work, rather than just hoping for the best. And if this kind of strategic, numbers-driven thinking excites you the way it excites us, there are so many more levers to pull across your entire financial life. Whether it's real estate investing, home contracting work, or finding the right lenders, check out our links in the description below to see how we can help you get started.